Hey everyone, and welcome to The Explainer. Today, we're diving into the shadows of the global financial system. We're going to talk about a crime that powers pretty much everything you don't want it to, from drug cartels to international terrorism. Yep, we're talking about money laundering, the dark art of making dirty money look brand new.
All right, let's just jump right in. Picture this. You suddenly have $10 million in cash, and let's just say you didn't get it from your day job. You can't just waltz into a Lamborghini dealership and drop stacks of cash on the table. You can't deposit it. So what's the move? That right there. That is the core problem that every single major criminal organization on the planet has to solve.
You see, the real trick for any criminal isn't just committing the crime. It's figuring out what to do after. How do you take all that illegal profit and turn it into wealth you can actually use without getting busted? It's the one step that makes the entire enterprise worthwhile.
And that's where money laundering comes in. At its heart, it's a process, a system designed to wash the crime out of the cash. It's all about hiding where the money came from so that criminals can spend it, invest it, and build empires, all while looking like perfectly respectable business people.
Now, you got to understand, this isn't just a simple one-off transaction. It's more like a recipe, a very specific three-stage cycle that's designed for one thing and one thing only: deception. And if you understand these three steps, you'll understand how literally trillions of illegal dollars are sloshing around our global economy.
So step one is placement. This is honestly the most dangerous part of the whole operation. It's where you have to get that physical, dirty cash into the actual financial system. A really common way to do this is a technique called smurfing. No, not the little blue guys. It's when you take a huge pile of money, break it down into tiny, little deposits, and have people make them at tons of different banks. The whole idea is to stay small enough to fly under the radar. Okay, once the money is in the system, we move to step two, layering. And this is where things get wild. The whole point here is to create a financial maze so confusing, so convoluted, that no investigator could ever untangle it. We're talking about an insane storm of wire transfers zipping between shell companies in a dozen different countries, buying and selling stocks, art, anything, just moving the money around and around to bury the trail deep. And that brings us to the final step, integration. This is the payoff. The money, which has now been completely disconnected from its criminal origins, slides back into the legitimate economy. The launderer can now buy a mansion, invest in a tech startup, or open a restaurant. To the outside world, it just looks like the profits of a savvy investor. The crime is now, for all intents and purposes, complete.
But, the way criminals pulled us off? Oh, it has changed so much over the years. What started with, actual laundromats and other cash-heavy businesses has now gone completely digital. The criminal's toolkit is always evolving.
Just look at the difference here. The old-school methods relied on physical things: casinos, pricey art auctions, places where huge amounts of cash changing hands wouldn't look too weird. But today, the whole game has moved online. We're talking crypto mixers that can tumble and hide funds in the blink of an eye, decentralized finance, or DeFi, which lets people operate totally outside the normal banking system, and even thousands of tiny microtransactions that can secretly move a fortune without setting off any alarms.
But here's the thing. Whether we're talking old school or new school, there is one secret weapon that makes it all possible: the shell company. These are basically ghost companies. They exist only on paper, usually set up in offshore places with really strict secrecy laws. And as we saw with the Panama Papers leak, there's an entire global industry that exists just to create these tools of secrecy. They provide the fundamental infrastructure for hiding money.
So with all that going on, what is the world doing to fight back? Well, it's not like law enforcement is just sitting on its hands. There's been this huge, coordinated global effort to build what you could call a financial dragnet, a whole system of rules and regulations designed to catch these guys.
This defense system really has three main layers. Up at the very top, you've got the Financial Action Task Force, the FATF, which sets the international rules of the game. Then you have the banks themselves, which have to follow anti-money laundering, or AML regulations. That includes the whole know your customer process, where they have to check who you are. And all of that is backed up by some seriously strict national laws.
And these laws have real teeth. I mean, just look at the US. If you get convicted of money laundering, you're not getting a slap on the wrist. You could be looking at $500,000 fines and up to 20 years in federal prison. They are designed to make you think twice.
But, and this is a huge but, for all of these powerful rules and scary penalties, that dragnet, it has massive, gaping holes. And sometimes it doesn't just fail a little bit. If fails on a scale that is truly hard to wrap your head around.
Take a look at this number, $228 billion. That's how much dirty money flowed through one single tiny branch of Danske Bank in Estonia. It was just a catastrophic breakdown. The local regulators were completely unprepared, and the bank's internal systems just failed.
Or how about this one? $1.9 billion. That was the fine HSBC had to pay back in 2012. And why? Because they were caught knowingly laundering money for some of the world's most dangerous drug cartels and for countries under sanctions. This wasn't just a mistake, it was a feature of their business model. So yeah, these aren't small leaks in the system, they're sinkholes.
So what does all this add up to? Well, the best estimates suggest that the total amount of money laundered every year is somewhere between 2 and 5% of the entire world's GDP. We are talking trillions of dollars every single year, money that distorts our economies and fuels crime around the globe.
And all of this brings us to right now, and to the future. Because the fight against money laundering today is less about cops kicking down doors and more about a really high-stakes technological arms race. It's a constant battle between criminals and regulators.
What's so fascinating is that both sides are using the exact same technologies. Criminals love the anonymity of crypto to hide their tracks, but investigators can use the public blockchain ledger to trace those exact same funds. Criminals use the complexity of DeFi to create new layering schemes, but regulators are now deploying artificial intelligence and machine learning that can spot those patterns way faster than any human ever could. It's a constant game of cat and mouse.
And so that leaves us with the big question, right? In this never-ending race between criminal innovation and regulatory technology, between the next new weapon and the next new shield, who's actually winning? The answer to that could very well determine the future of our entire global financial system.